could be one more thing, though. If I could just have one moderator to help me here, that would be great. There you are. Welcome back. And
hello, everyone. And for this, I definitely need more panelists. Can I have more panelists, please? Perfect. So, in all seriousness, good afternoon, everyone, and welcome to this panel. First of all, I want to let the panelists introduce themselves. Well, Jussi, you have already seen. Let's start with you.
Sure. I'm Tristan. I'm the head of marketing at Monzo, which is a challenger bank based in the UK.
Well, yeah, they know you already. My name is Robert. I'm representing TWINO. So what we do is a peer-to-peer lending platform, giving loans to people and having investors on the other side that are funding these loans.
So today we're going to talk about fintech hype and whether it's ended or not. So first thing I wanted to ask really is the trends. What have you seen and what are you expecting to see in the fintech space? And what do you think is the most overhyped trend, Robert?
Sure. I think the greatest thing that I've seen lately in the fintech environment is the fact that we are seeing that all of the financial services that are offered to consumers are going more to more in the background, which is quite great for the consumers because they still get to have these great experience of basically anything. In our case, may it be investing. So a person can invest his or her money by setting up an automatic investing tool. So they just set up some criteria and the money is being invested automatically. I mean, you could sit here and have your money invested. The same applies to, I guess, your services, Adyen and Monzo. You can just have the things happening in the background. People have great experience and your technology is working. So I guess this trend will become even more common in the markets. People will benefit from that and, there will be definitely more companies to offer some things like that.
Jussi, what's your trend?
So much going on at the same time. And everything is being clumped up into maybe the payment space, and maybe it shouldn't be. And there's a lot of animosity against the banks. I do think that we're going to see a lot of collaboration going forward anyways, with the legacy players and also with the new fintech players popping up. That's going to be a great advancement for the consumers mainly.
Tristan.
The thing we're seeing in the UK is this just sort of, we were talking a bit about it earlier backstage, this growth of small startups with e-money licenses or not even, or using other people's licenses, building small features. Near our offices in London, there are probably 15 fintech companies, all doing something very, very specific, whether that's saving the change or sending a chatbot for you through Facebook Messenger. And just sort of crazy, crazy growth in new companies doing it. I guess we'll see in a year or two. It feels like not all of them are going to survive.
This kind of brings an obvious question. Do you expect to see consolidation in the market?
Yeah, I think we'll have to. We see this sort of unbundling of big banks where companies target and focus on very small areas, whether that's loans or mortgages or current accounts. But that all has to come back together at some point. Consumers don't want 55 apps for every single money transaction that they might do on their apps. Hopefully not back into one big evil conglomerate. Hopefully maybe some collaboration to make that work.
So you see Adyen is already in a position, I guess, to go shopping. Is there any plans? Have you already acquired any companies? Are you looking at the market?
Oh, it's great if I could comment on that one, as we're an IPO company now. No, but besides giving you the vague answer, Adyen has, from the talk, I hope that was clear, we only have one payments platform, where you typically have 4 to 5 different industry peers trying to shift this transaction between them and trying to make a cut somewhere here, or I don't know. In this sense, everything fails if we become like any other player, growing through acquisition, trying to do a mishmash of different platforms.
Okay.
Hope that is a yes or no for you in some way.
Thanks for a great vague answer. Thank you, Jussi.
Good.
Robert, do you
Yeah.
expect consolidation in your niche of fintech?
I think that what we are seeing right in UK now, the open banking is happening there. It will happen in Europe already, I guess, pretty soon. It will take some time to catch up on, but still, I think that's the trend that we will see. There will be there will be banks. I mean, it's probably here to stay. At the same time, the banks will definitely change. They will have more partnerships in place. They will have good services to offer to their clients, but they might not be their services. What happened to work? How does it happen to work for consumer? It's okay for him or her because they still get the service. They get the best service possible while they're still sitting in the same bank, so they don't have to change the accounts. So no hassle, still good services, and I think it's actually a good thing for the banks. Still, fintechs will also get some traction because you get more clients, you get more data out of that. So interesting times ahead, definitely. I guess it will start this year, but this trend will definitely go in the next couple of years in Europe and UK.
Right. So I have to say that I'm going to keep asking questions for now, but if you think that my questions suck, you have a great chance to ask your own. You see there the address of the website, slido.com. You can go there and enter the hashtag of the event, and you can ask your own questions. I will see them here in a tablet and definitely will ask them to our panelists. But for now, speaking of trends and hypes and all that, cryptocurrencies, do you work with them? Do you expect to work with them? Do you despise them? What's your stance?
We are not working with them. We are not planning to work with them in the near term, at least. I think in our case, we are an investment platform, but it's more or less passive income for the people. It's quite stable return. You get 10% more or less of interest per year, which is good. And then to risk with cryptocurrencies, it might be, I guess a little too early for everyday consumers. But technology is nice. It's something to play around. New knowledge never hurts. But at the same time, I mean, at least for our side, it's probably too early. But we are keeping our eyes on what's happening in the crypto space. So it's always interesting what's there.
That's what everyone does. Adyen, payment processor, you should be able to facilitate some cryptocurrency exchange and trading.
Interesting. Very interesting.
That's news for you, right?
There have been on the platform we were able to process bitcoins before. That was early days.
Right.
As of now, we're just watching the space with key interest and seeing how the developments are going to go. So it's going to be interesting in the coming years.
At this, everybody's watching. Okay, Monzo.
Yeah, we're watching.
Yeah, but imagine it's really difficult.
The
right?
thing we see, right, is that lots of people try to say for us that not supporting Bitcoin means we hate cryptocurrency. And it's just the fact that we're trying to build a bank that works for the vast majority of people. And right now, that's saving money rather than investing in Bitcoin. Bitcoin is amazing. Crypto in general is amazing from a technology point of view, but it really only affects 1% of people. At the point that 20% of people want it, we'll definitely support it.
Yeah,
Hey.
and it's tricky. I mean, imagine if you received your salary or bonus in crypto. I mean, come on. Maybe you would
I would rather not.
have a jackpot if it doubles in values in the next couple of weeks. But if you get, say, $1,000 and the next day it drops 20% to $800, so, I mean, there are a lot of questions whether people would actually want that in their daily lives. But we'll see. I mean, time will show. Maybe it will change. Maybe
It kind of reminds me of the realities of the post-Soviet republics in Eastern Europe. Being Ukrainian myself, I kind of still remember the 90s where people sometimes got their salaries in sugar or like tea or potatoes and stuff like that. So cryptocurrencies are kind of in this range for me, so I would rather probably pass on this opportunity. So everybody's got a pair of eyes, everybody's watching cryptocurrencies. Do you think you would be more eager to adopt cryptocurrencies if they were more regulated by the government? Monzo?
Not in the UK. I think in the UK, it really is just a decision from us from a focus perspective. I think in the US it could be quite different.
Right.
As we look at launching in the US in the future, cryptocurrency plus US regulator does not go well together at the moment.
Yeah, it's actually an interesting point. I mean, in Europe or US it might be tricky because we have quite stable currencies, so why? But if you go to Venezuela, for example, where there's crisis situation, huge inflation, people can't really have any real money, then cryptocurrency would work. I guess it's technology, so you can access the money, even if the banks go down. So yeah, in some cases that might be really helpful already now. But I mean, probably not in Europe or US. Yeah.
Right. So while we're on topic of regulation, what's your general take on where the regulation in financial services is going across Europe and in the country of your own jurisdiction? Starting from Jussi, for example.
Right now, the advancements are fantastic. Card payments are finally perhaps going to be where they should have been 10 years ago when 3D Secure was launched. So for those of you who don't know, Payment Service Directive 2 is happening this year. That's quite an interesting development, especially for any consumer out there. It's going to have a better and much more secure flow in the sense that you're going to be using card payments, accepting them easily online, not having any redirects to be having an extra verifiable window for input over SMS code or anything like this. Most of the time, you're going to just be able to identify yourself by biometrics on your device, something that you already own. That's going to be amazing. Hopefully, we're also going to see something in the likes of a really secure way of conducting payments, just like Google Pay or Apple Pay are trying to do it. But we're going to see something across the table on every site, anywhere globally. You're just going to have one unified symbol. All the address details will already be sent. No card details will be sent in the transaction. This is exactly how it should have been built back in the days. And now the schemes and the likes of Adyen are working together to make this happen.
It's very optimistic.
But this year, that's when it's happening. It's laying the groundwork for years to come.
Tristan, what's the British regulation like? Is it good for you?
Yeah, since the 2008 financial crash, regulation in the UK was changed massively and has enabled challenger banks and other companies to start up in significantly simplified regulation. And what we find now, actually, that most regulation is pretty common sense. There are still a few arcane legacy bits that get in the way, especially around identity verification. But in general, it's pretty good. We will see over the next few months with this little Brexit thing what happens. And hopefully that doesn't mean that we end up sort of with the EU going off and doing PSD2 and developing an amazing simplified payment systems platform while the UK is left in 2019. So fingers crossed. But yeah, at the moment, it's pretty good.
How is it for you, Robert?
We are in 5 markets. We have offices in 5 markets right now. And I would say that in each of the markets are pretty much different.
5 markets, which are?
Latvia, Poland, those are the European ones. And then we are also in Russia, Kazakhstan, and Georgia. And each country is a bit different in its sense, and sometimes it's not a bit, it's significantly different.
You certainly must know stuff about regulation.
Yeah, so it really differs from the markets. And that's the lending side. Then we also have the investing side, which is currently unregulated in Latvia. So we are in talks with the Ministry of Finance and regulator to get a regulation that works both for us and most importantly for the clients. But it's really time consuming. I mean, we are discussing on some points and it's quite a challenge, but well, I'm feeling confident that we'll get to something in the nearest time. I mean, next year, hopefully.
Right.
It's really time consuming.
Something to look forward to.
Yeah.
I recently read an interesting piece about Chinese fintech in general, and one of the interesting thoughts that it had in was that there were 2 very different approaches that the governments in Europe and in the US took as compared to China in terms of fintech. So in China, basically, fintech companies, they were given a lot of freedom from the get-go. They were not regulated up until they got to a certain pretty high level, I have to say, which is why now we have what we have there with WeChat and Alipay and all that. And in Europe, things were a bit different. In Europe, everything was regulated from the very grassroots, from the very beginning. So do you think this approach in Europe has impeded the development of the industry, or do you think this is a good way to do it?
Maybe both, right? I think you can make a strong argument that it's both slowed some innovation, but that's worth it. I think for us, the importance and sort of responsibility of looking after people's money is something that we think about a lot and spend lots of time on. And regulation is there to ensure that companies do that and to sort of ensure that we don't just get down to the lowest common denominator. And so I think constantly trying to find that balance between speed and ease of regulation while still protecting consumers. And that feels to me like the right balance versus just going sort of full unregulated industries.
Right.
Yeah.
Any more comments from the panel?
Yeah, I can add to this, I guess. I think come back to the history. US has always been more or less in the forefront of technology and development and basically innovations, while China 20 years ago was not there. So what they had to do, they had to make an impact quickly. And they basically did it by allowing companies to do this. They didn't have any regulation, so the companies improved, got a lot of clients, and basically had quite impressive success there. I mean, those numbers that we are seeing in China are huge, and if we compare it to US, it's a really different market. With Europe, again, it's a different market. I just came back from Kenya. It's also completely different. There they have M-Pesa, which is, I mean, it's not a bank account, it's a telco offered service. So you can send money, you can receive salary there, but it's not a bank account.
Like a carrier operator billing of sorts.
It's Vodafone. Vodafone went to Kenya, and they have had enormous success there with this, but it wouldn't work in Europe. I mean, we have debit cards, which are fine. You can use it by just tapping, or wearables, or things like that. And yeah, I mean, M-Pesa wouldn't work in Europe. So I guess those are just different markets, and yeah, we'll see how it sort of globalizes in all of those markets together.
So you see Europe and regulation or China and freedom? Oh my God, I never thought I would say it in one
China and freedom.
Fintech.
Fintech freedom. I think it happens pretty much anywhere. All regions, all countries have their, I mean, they have their perks, and you have to adhere to all the perks. I mean, if you look at the German market, for instance, they're perhaps the best with everything that comes to GDPR. They're already done with this, but it works for them. So why would you want to mess with this? Just do what the consumers want.
Makes sense.
Most important.
Makes sense. Right, I'm going to ask a few questions coming from Slido. So please keep them coming and keep voting for the best questions. That's how we decide which questions to go for. So first one, how lending platform business model will survive during the financial crisis? That's probably
for me, right? I would say that our business model is pretty different compared to the peer-to-peer platforms that we are seeing in UK or even in Germany. Latvian platforms have the module that basically all of the loans that are on the platform are pre-financed.
Right.
So in our case, we are pre-financing those loans from our balance sheet, and then we are offering them to our clients. Essentially, it means that we are giving out loans to people that we really just trust in. The acceptance rates, or the rates to whom we give the loans, are usually around 20%. So every fifth person who comes for the loan gets it. So most of them don't. And at that point, we feel confident that the person will give the money back on a timely manner. With that being said, we are also profitable. Last year, at least, we were profitable, and we are trying to do the same in the next years. So I think it should work in our case, because the spreads between the interest rates charged to the borrowers and paid to the investors are larger compared to UK platforms. So, well, we feel safe on this.
In terms of volumes, how big are the different markets you're operating in?
The biggest markets for us for the lending operations are Poland and Russia. In Russia, we are among the online non-bank lending leaders. And altogether, we have funded more than 400 million euros worth of loans.
And you got huge interest rate in Russia, if I'm not mistaken.
For the origination part, those are mostly short-term loans. So on annual basis, they might seem large, but if you divide it by 12, then they become smaller. And that's the biggest challenge with short-term loans. You have pretty high costs at the beginning and issue the loan. And if it's short-term, then you don't earn in the months. So you have to have higher annual rate, but it's monthly rate in the end of the day.
So you don't think that your business model is at risk?
No, currently, definitely not.
Right. Okay, next question probably for Monzo, but also for everybody else. When will there be a bigger wave of falling neobanks?
Making predictions is always guaranteed success. I think he's probably separate out why neobanks will fail, and there are two different answers. So I think what we'll see over the next 5 years is general market forces causing failures or acquisitions, sort of failures under the guise of an acquisition, exactly. I think that's going to happen on an ongoing basis, right? It's not possible for 60 new fintech companies to be starting every month and not see those failures. And I think we'll see some of the bigger ones going into bigger banks.
So the question is when?
When? I don't know, over the next 3 years, probably, starting in a year's time, so sort of 1 to 3 years. I think tied into the earlier question, if there's another financial crash, then we'll see a huge number of banks fail, of challenger banks and new fintech companies. Because they're funded by VC investment at the moment, so are we. Very few of us are profitable, and raising money in that sort of environment is very, very difficult.
For everybody else, do you expect, in a wider sense, a wave of falling fintechs?
Okay. I mean, fintech is no different than any other startup, so definitely yes. And as you know, in most of the cases, if you have 100 companies started today, I mean, in a year's or a couple of years' time, 90% will go bankrupt. If they get VC funding, maybe they will take a couple of years more. And I think fintech is no different. So it's a challenging environment. You compete against the banks. It's not easy to compete sometimes. But there are some niches where fintechs can really thrive and be fine, I think. So some will go under, some will stay there and become quite impressive players, I think.
Jussi?
Never, no. Of course not. Nobody knows.
Right. One more question from here. Actually, it's two questions that are pretty much the same. So why are most banks against the use of cryptocurrencies, and what is the difficulty of using cryptocurrencies in your field? So there's only one bank, actually. That's Tristan and Monzo. Why are you against the use of cryptocurrencies?
Well, we're not against the use of cryptocurrencies. People pay sort of proceeds of cryptocurrency into Monzo all of the time. I think banks were against cryptocurrencies initially because they didn't understand it, and now because it's just very, very hard to track. The financial crime and money laundering regulations are very, very strict. And being able to prove a source of funds is much easier when you've sold your house and you've got a sort of transfer of cash from a bank transfer. It's much more difficult when it comes through sale of cryptocurrency. Right. And if you're a big bank, you have a choice to take the risk of accepting cryptocurrency and all of the extra work, or not to. And there is no downside to not accepting it, really, at the moment for a big bank. And so I don't think it's an ideological opposition to it. It's just big, slow banks not wanting to take the risk and time to accept them.
We kind of discussed it already, but do you have anything to add in terms of what's the problem?
We discussed this in the roundtable before. This topic was also there. And the main idea that we also thought at that point is due to regulation. So imagine if you're a bank, as you said, why would you do that? I mean, it doesn't really make sense. I don't know if you have ever taken part of any ICOs, so initial coin offerings. I have, and honestly speaking, I could be anyone and investing my money there. It's, come on, you're just sending some money to some mystic place. Sometimes it's unregulated exchange.
Right.
So they don't really prove the source of funds. And then you are buying something, some digital token, and afterwards, if you're selling that and sending that to the bank, I mean, yeah, you can do it like that, but if your bank would sell cryptocurrencies, that would be already, I mean, yeah, it's too risky, I guess, at this point. There's no regulation and no big benefits to the banks.
How are your ICO investments going? Are they hugely successful?
Honestly, it wasn't that bad because I tried it in 2017 in the middle.
Yeah.
And I sold some part at the end of 2017. I lost something, but it wasn't that bad. Yeah. But ICOs, I mean, it was really wild. I mean,
Yeah.
it's the UX is non-existent there. You're just buying something. You're not sure whether you will make the transaction because there's just this huge, a lot of numbers and letters, and you're just trying to type them, copying, then you're checking. I mean, it's different.
It's weird
Not
that
banking.
consumers don't take up Bitcoin.
Yeah, I mean,
Did you invest in ICOs, Tristan?
No, I've stayed well away, which, maybe I'll come to regret in 10 years' time.
Jussi?
Of course.
Have you?
Yes.
Have you been successful in it?
How do you measure success?
Well, how much have you lost? Let's put it this way.
Actually, I went ahead, so I was even before Robert here. So
That's good.
yeah, and I wouldn't say that I could have jumped ship a bit earlier, but still made good.
no Lambo.
Made good.
Didn't make the Lambo.
Nice. So while we're on topic of banks, so what are the banks for you? And we're talking about the large banks, the traditional banks, the conventional banks. What are they? Do you care about them? Are they your partners? Are they your competitors? Are they the dinosaurs that have to die real soon? What do you think? Another bank, Monzo?
We change our mind quite a lot, honestly. Sometimes we see the big traditional banks as our main competitors. I think that's a sort of easy way out of it, and because what we actually see is that our biggest competitor is apathy from customers who just have been stuck with these old traditional banks for hundreds of years and just can't even imagine that there's something better or different. And so that's our biggest competitor, basically, letting people know that there's an alternative. I think what we'll probably see over the next year or two is the big banks becoming much more aggressive against competition, deploying significant capital, and I imagine as a journalist you will start to receive more and more briefings against challenger banks around security and privacy and things like that. I think that will continue, and it will just get, over the next year or two, become a pretty aggressive market.
I see. You see, you have to work with banks just because of what you're doing, but what do you think of them?
We think that there's a lot of things that can be done together with the banks. I mean, we help the banks in our industry to accept card payments in a better way, because most of the banks are still card issuers. Most of you guys here have some Visa, MasterCard, or any other card brand in your wallets. Most of those cards are issued by a bank that's hard-coded and really behaving in a different way than any other bank. And this is what we're helping them to untangle. We're seeing it more as a partnership, and who ultimately benefits? Well, of course, the consumer with the card. The purchase is going through in a secure manner. That's what matters in this sense.
Right. Robert?
Yeah, well, I think the banks are not going anywhere, not going to happen in closest, nearest years, and that's not a bad thing. Most of the people, I mean, I think in Europe, like all of the people have bank accounts. So you are using that. You need mortgage, you want to buy a car, so most cases you will use the bank, and it's necessary. One quite cool thing that is happening in the markets is that there's a lot of fintechs in Europe, and at one point, banks are really forced to develop their systems to become better, to lower the fees, and so on because of fintechs. I mean, what TransferWise, for example, did in UK, they just showed their fees compared to Barclays, HSBC, and other banks, and well, they're forced. Everybody sees that, and some people start to join those fintechs. And yeah, and banks can still be profitable. They still will do fine. Just the product will become better for the consumer, and that's the great part, I mean.
Great. So we got less than a minute of time left. So I want to ask you for a really short closing statement, each of you. Tell me, what is the most underrated, underhyped trend in the fintech space that we all should be looking for in the year 2009? 3, 2, 1, go.
I think that fintech will become even better and bigger in the next couple of years.
So what's the most underrated trend? What's
underrated? Well, I mean, yeah, the whole fintech concept, it's quite small right now in the perception of people, but I think it will become even more huge. Well, for example, in Latvia, I mean, not that many people use fintech services right now, but I think it will pick up with the time.
Right. Jussi.
Fintech will merge together with identity. You will become financial services yourself, and your identity and data will be key as part of it.
Are we going to be identified by our credit cards?
Or whatever type of method that you prefer. Could be. That's one of the cases. I mean, why wouldn't you be able to, if it's a card, you could be identifying yourself in any sort of way in transportation, when you travel as a passport. Anything is possible.
Right.
I totally agree with that. And probably customer support, actually, I think, where, if you think of big banks, they used to have a branch in every town and every city, and then fintech will take that away and branches are closing already. Finding out how you can supplement that, how you can replace that with still getting a human connection so that it's not, when you deal with Google and you don't get access to your email, it's just a blank wall that you literally can't get through and you have to create a new email address. You can't do that with someone's bank account. And we will see companies try, but I think keeping that connection with the customer is really, really important.
Perfect. Thank you very much. Great panel today. Tristan Thomas, Head of Marketing at Monzo, Robert Lasovskis, Investment Platform Lead at TWINO, and Jussi Lindberg, SVP Business Development, Northern Europe at Adyen. Thank you very much for showing up today. Thank you so much for listening to us. Have a great rest of the day.